morning and welcome to this brand new edition of the newspaper show right here on ET Now. I am Shel D'Souza and I'll take you through the top headlines and the stories that's there on the Economic Times as well as the Times of India for you. But let me get going with the top 10 headlines that's there on the Economic Times. And first up, the top headline is another week, another check coming in for Reliance's Jio platforms. Saudi's PIF invests 11,367 crores in Jio platforms. Moving on, you have Supreme Court, which was hearing the AGR dues case yesterday, and Supreme Court is seeking 10-year financial information from the telecom companies. Moving on, API production plan may be tweaked to include exports. Faster anti-dumping probes on China imports. Moving on, India set to erect a great wall against Chinese companies. Pertaining to that, you have railways to terminate contracts with Chinese companies. Also likely curbs on steel from Japan, EU, US as well as Korea. Shifting focus to what Prime Minister Narendra Modi had to say, Prime Minister is saying that the economic indicators signal a bounce back. The migrants will get 50,000 crore employment scheme. And lastly, N. Chandrasekaran of Tata Sons says that we need to set up a coal exchange. And those are the top 10 headlines coming in from the Economic Times this morning for you. Let's shift focus and let's look at the top corporate headlines that's there in the paper. First up, Mahindra IP funding for their EV business. Moving on, you have IBM India will be cutting offices by half. You have Nykaa, they're saying that e-sales to be back in shape by June end. Myntra has hired 5,000 hands for sales season. And lastly, GE to drive Edison platform from India. Now let's shift focus to the market headlines that's there on the Economic Times. And first up, financials RIL take Nifty above 10,000 in yesterday's trading session. Wall Street drifts through wobbly trading session. We saw muted moves coming in from the Wall Street in the overnight trading session. You have SBI's Mundra NPAs at 15%. That's the word coming in from SBI Chairman Rajneesh Kumar. BHEL gained 16% on likely surge in demand. And lastly, gold rally helps Muthoot Finance shine. And that was a roundup of all the headlines that's there on the Economic Times for you, right from the corporate to the market and the top 10 headlines. But let's shift focus to the top story that's there on the Economic Times this morning for you. And this is the story, another week, another check coming in for Jio platforms. And this time who it is, my colleague Ajay Sharma is joining in with all the details. Ajay, good morning. A brand new week. We're coming towards an end of the week rather. And you have another check coming in for Jio platforms. Who is it this time around?
Well, this time it's Saudi Arabia-based PIF, which is investing in Jio platforms, taking the amount raised to 1.15 lakh crore in the last couple of weeks. Jio platform has been on a massive value unlocking drive, and world's best investors, including Facebook, 3 sovereign wealth funds, private equity funds like General Atlantic, everybody has been pouring in. About 25% is what they've sold up so far, raising 1.15 lakh crore. So they are well above their target of becoming net debt free by December. What has also happened in the way is that the complexion of the company is completely changed, and it is well accepted as a technology company, an e-commerce AI blockchain kind of a consumer company than just an oil conglomerate which it used to be. And part of that is getting factored into the stock price as well. The way multiples are expanding, the stock is trading at fresh lifetime highs as we speak, crossing $130 billion in market cap overall and edging closer to global biggies like the FANGs, multi-billion-dollar companies. The smallest of them is Netflix, 200 billion plus, and Reliance has come to 130 billion already. And if this is how value unlocking continues and the way earning profile completely improves, the likelihood of that expansion is further. So it is definitely very good news for Reliance Industries shareholders.
Thank you, Ajay, for taking us through the latest development coming in from Jio platforms. The Saudi Arabia's PIF that's invested 11,367 crore rupees in Jio platforms. Deal is for 2.32% stake in the Jio platforms. Moving on, there are two stories that's there on the Economic Times on the front page. First up, we have a story that's saying in a bid to shield local companies from unfair trade practices, faster initiation of anti-dumping probes on China imports likely soon. And another story that we have is API production plan may be tweaked to include exports. For both the stories, I'm joined by my colleague Pankaj Podar. Pankaj, first up, let's talk about the anti-dumping duty. What is the government likely to do on that front?
So what we are picking up now from Economic Times is that India may actually respond faster to complaints about dumping of Chinese products here into Indian countries. And this is to stimulate the local production as well as, of course, reduce the dependence on import, which, of course, is the entire plan of Atmanirbhar Bharat. The Commerce and Industry Ministry plans to reduce the time taken to initiate an anti-dumping case by around 30 days now, from around 30 days now to about a few days time. This is chiefly to protect the domestic companies from unfair trade practices. Almost half or our anti-dumping cases are against China, and imports from there do a major damage because they make the local industry unviable, and that's the reason that probably this is happening. What we are picking up is that there could be a faster response to complaints about the dumping duty, especially from Chinese goods, as we are looking to increase the local production.
Also, you have another story that's there on the Economic Times this morning, Pankaj, that is talking about the government is planning to tweak its newly proposed 10,000 crore scheme to boost domestic manufacturing for active pharmaceutical ingredients. What about that story? There are some more details coming in on the Economic Times on that front as well.
So, API, of course, has been a big thing that everybody has been talking about, and how, Indian pharma companies should manufacture their own API here in India. And for that, of course, the government has also done a lot of things. They have gone ahead and, made a newly proposed 10,000 crore scheme. This will boost the domestic manufacturing of API. But, what we are now picking up is that they plan to tweak this scheme. This comes in after a request which has come in via Niti Aayog, where they say that it has to be widened in terms of the sort of benefits that are giving, and they should also include exports of bulk drugs and API. This is something that we are picking up. Right now, it's only for domestic usage. Let's see if this go ahead and increases from this. This is a Niti Aayog recommendation, which probably government is considering.
All right, thank you, Pankaj, for joining us this morning, taking us through both the stories that's there on the Economic Times relating to boosting our exports in India and also reducing the imports liability as well. Let's move on and let's talk about another story that's there on the front pages of the Economic Times, and this is the story that I am actually going to talk about, that India is set to erect a great wall against Chinese companies. High-level meeting will be soon to discuss the extent of the measures. Government plans to restrict Chinese investments in infra, levy higher import tariffs, as well as review FTAs. So India is considering multiple comprehensive measures to curtail the country's economic reliance on China, targeting trade, investment, and project services in the wake of the border hostilities. So you have a small snippet here that's there on the Economic Times that's actually talking about what sort of moves that is likely. So by reading directly from here, Curbs may be imposed first on road projects and expanded to other infra projects and the PSUs. Law and road ministries are considering the contours of new bid documents. BSNL and MTNL already told to cancel the contracts given to Chinese firms. The government will re-examine instruction reserving contracts below 200 crores for local firms. So this is what the basic story is. The India is set to erect a great wall against Chinese companies and plans to restrict Chinese investments in infra, levy high imports. Also, they will review the FTAs as well. But now let me shift focus to page 6 of the Economic Times. Give me a moment while I flip the pages, and this is regarding the Amrapali case that is going on in the Supreme Court. For now, Supreme Court has cleared JP Morgan's fund for stuck Amrapali projects. Transfer of 187 crores to an escrow account. That's the word coming in from the Supreme Court. The Supreme Court on Thursday said the JP Morgan India funds to the ED had attached be transferred to an escrow account, setting the stage for utilization of the money to complete the stuck housing projects of the Amrapali group. It is a much needed fund coming in to complete the project. It has been stuck. Also, all the buyers of that housing projects also in a lurch at least. ED has had attached 187 crores of JP Morgan India under PMLA. While JP Morgan has denied any wrongdoings, a financial audit shows major irregularities in financial dealings of Amrapali. Supreme Court bench has also asked SBI Cap to finalize an action plan to finance the projects. And though the state-owned NBCC took over part of the project, top court was struggling to finance the stuck project. So this is the story coming in on the Economic Times on back of the Amrapali project. Supreme Court has cleared JP Morgan's funds for stuck Amrapali project. Let's now move on and let me take you through another story that's there on the Economic Times this morning, and it's on the page 6 itself, and that is on Mahindra and Mahindra. They are eyeing a PIF funding for their EV business. This is a story that my colleague Vinny is now joining in to talk more on. Vinny, take us through the story. What is it actually saying?
Mahindra, one of the largest manufacturers of tractors and utility vehicles in the country, is now looking at PE funding for its EV business. That's the electrical vehicle business, which is a decade old for the company. Now, this is a part of the newly formed strategy for the company, where they'll be looking at fewer businesses which would be profitable in the long run. Now, this is obviously showing a clear change in the strategy of the company in the last 6 months, and especially with the coronavirus, which impacted the automotive business. The company believes that it's the best time to focus on electrical vehicle business, which will be quite profitable in the long run as well, and they'll focus ahead also as well on the long-term strategy. Overall, they believe that currently they do have a decent share over there, and because of this, they do not want to lose any share or cede any share to any competitors. So this is why they are looking for a funding for the electrical vehicle business. As of now, Pawan Goenka, the managing director, did say that the company would not be selling any stake in Mahindra Electrical or monetize any assets, but they are very they are open to getting fundings from any private equity or small investors as well. And let's not forget that Mahindra Electrical is currently one of the largest electrical vehicle maker in the country, and that is why we will see some, this could benefit Mahindra going ahead. And according to sources of the ET paper, it said that the sourcing of fund could be to up to around $100 million, or that is 760 crore rupees over the next 2-3 years. So let's see how this funding actually pans out for Mahindra and who are the investors is what we'll watch out for.
All right, thank you, Vinny, for taking us through the story. Now, shifting focus to a story that's there on the page 8 of Economic Times. So there you go, COVID-19 and the disruption that it has caused. With most of us actually working from home, here is IBM that's taken the step, because the work from home is the way to go. IBM India to cut offices by half. This is a source-based story that's coming on the Economic Times for you this morning. Company plans to axe lease agreements at nearly half of its offices in major cities. The tech major has leases for over 1 million square feet for its centers. It is spread across cities such as Bengaluru, Hyderabad, Noida, Gurgaon, as well as Kolkata. The firm has over 1 lakh people in India and also employs temporary staff from the staffing firms. So IBM is planning to discontinue their lease agreements at nearly half of its offices in the major cities, like I mentioned, and this is all as per sources that told this to Economic Times. Maybe 25% of the people need to come to office regularly. For others, it will be flexible and their workspace will also be the same. This is as per the sources who've told this to Economic Times. The person did not specify a time frame for ending the lease agreements, and IBM has declined to comment on Economic Times queries related to the story. So for now, IBM India taking the step forward. They're cutting offices by half as they feel work from home is the way to go ahead. Let's shift focus now to a story that's there on the page 11 of the Economic Times for you. Give me a moment while I get onto the page, and it is regarding the migrants. They are going to get a 50,000 crore rupees employment scheme. The finance minister yesterday held a press conference post market hours with regards to the Garib Kalyan Rozgar Yojana that will be launched by the Prime Minister on June 20th in 6 states. So what will this particular scheme actually do? PM to launch Garib Kalyan Rozgar Yojana Abhiyan, sorry, I beg your pardons, Abhiyan on June 20th. What it seeks to do is provide jobs to returnees migrants. 25 kinds of employment infra jobs have been lined up. At least 25,000 migrants in each district. Campaign to run for 125 days. You have scheme to cover migrants in 116 districts. How much will it cost? And our total outlay is about 50,000 crore rupees. Allocation already available to ministries for existing schemes. Also, all key ministries roped in for this mission. So this is what the finance minister gave a precursor to the launch that the Prime Minister will do on June 20th. It is Garib Kalyan Rozgar Abhiyan. So this is something to look forward. This is for the migrants. Moving on, let's talk about Beijing. Remember that there is been a sudden outbreak of COVID-19 cases, and you have a top expert talking, or China's top expert saying that the outbreak in Beijing is under control. Is also saying that the findings have been based on a curve reflecting. They're actually rather saying the peak of the outbreak was on June 13th, and China has surpassed the peak. He's saying that the findings have been based on a curve reflecting when infected patients began to show symptoms, and he said but did not elaborate on how experts ascertained that the outbreak's peak is done. So for now, China's chief epidemiologist is saying that the outbreak in Beijing is under control. Let's shift focus now to a story that's there on the Times of India. It's there on the front page of Times of India this morning, and that is talking about Maharashtra state government is considering opening gymnasium and non-AC salons and also allowing shops to operate on both the sides of the road by the end of June. Mumbai City's Guardian Minister, that is Aslam Sheikh, has said it. He also added that the offices would be allowed to call up to 30% of employees to work. However, in an exclusive to the Times of India, Deputy Chief Minister of Maharashtra, that is Ajit Pawar, has said that no decision has been taken on further relaxations in the state. So there is a development coming in on Mumbai in Unlock 1.0, but we yet to get a confirmed word from the minister and the ministry on that. Let's shift focus now to a story that's there on the page 6 of the Economic Times, and that is India may impose anti-dumping duty on imports of certain steel products. To talk more on the story, I am joined by my colleague Mubina. Mubina, good morning. Take us through the story.
Amidst this entire Atmanirbharta move, we have a lot of steel players now also approaching the Director General of Foreign Trade, asking for anti-dumping duties to be imposed on account of excessive imports of certain steel products. Specifically speaking, we are talking about flat-rolled steel products. So anti-dumping duty may be imposed of flat steel products coming in from European Union, Japan as well as Korea. We are looking at perhaps a period of 5 years. There will be a probe that will be conducted. Then the Commerce Ministry's investigation arm, that's the DGTR, will recommend an anti-dumping imposition on the product from these countries. Now, the duty recommended is between the range of $222 to $334 per ton. This is going to be sent over to the Finance Ministry, and furthermore, they've made it very clear that it is absolutely in line with the WTO's rules and regulations. So, like we've been saying, right, strike when the iron is hot. In this entire Atmanirbharta move as well, the key hindrance to that is imports. Steel, well, this is not the first time that they've been a victim to the flood in imports that has been coming by. And now players like JSW, tin plate, etc. have approached the DGTR. The recommendation has gone forward, and now it will be a decision for the Commerce and the Foreign Ministry.